You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, January 14th, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast, that is our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us a little later, he'll walk you through step by step how to take the trial. If you take the trial today, we'll get you indicators indicating today. Your trial will officially start tomorrow, but I know that's the middle of the week, but don't worry, you'll still get 5 consecutive trading days. Now, you're not just getting access to the live training room. You're getting access to the indicators. You're getting access to everything a passport holder has access to. From the live training to the private mentoring to the logic alerts, the concierge, everything. We treat you just like a member for 5 consecutive trading days, no credit card required, so that you can make a well-informed and intelligent decision as to whether or not what we do is right for you. Now, there's 2 different ways to join this afternoon broadcast, which is open to the public. Remember, the first broadcast, members only, trial members. This broadcast, everybody everywhere on planet Earth with an internet connected device. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says noon broadcast. Click the link in the email at 12 noon Eastern, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember, youtube.com/CFRN. You already have the YouTube part memorized, so yeah, really all you got to remember is the CFRN part. youtube.com/CFRN. Not only do we broadcast live every trading day, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are and how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, but you can get a good idea of how we got from where we were to where we are now. Again, youtube.com/CFRN. While you're there, be sure to hit the subscribe button and the little bell This way, anytime we go live, you'll be notified. All right, let's get into our daily devotional. This is our schedule right here, each and every afternoon. The topic of the devotion that we're in right now, we're in day 5 of 7. 7 ways to renew your mind. Today's scripture is 2 Corinthians 10, verses 3 through 6. The world is unprincipled. It's dog-eat-dog out there. The world doesn't fight fair. But we don't live or fight our battles that way. Never have, never will. The tools of our trade aren't for marketing or manipulation, but they are for demolishing that entire massively corrupt culture. We use our powerful God tools for smashing warped philosophies, tearing down barriers erected against the truth of God, fitting every loose thought and emotion and impulse into the structure of life shaped by Christ. Our tools are ready at hand for clearing the ground of every obstruction and building lives of obedience into maturity. 2 Corinthians 10, verses 3 through 6, and that was the Message translation. So today, the 5th step, 7 ways to renew your mind. Step number 5. Resist negative thoughts and assist positive thoughts. One thing that is important to remember is that positive thoughts are not going to automatically stay in our minds, and it is our job to assist them. Similarly, negative thoughts are not going to leave automatically, and therefore they need to be resisted. In the first of Jesus' parables, he speaks about the seed, soil, and the sower in Matthew 13, teaching how bad things like weeds need to be pulled out, and good things like seeds need to be planted. All good seeds need nurturing for them to sprout. However, for the bad seed to grow, you need to do nothing. They grow on their own. The same goes for thoughts. Bad ones will not leave. Good ones will not stay. Therefore, the best way to change your mindset is to understand the importance of consistency in introducing godly thoughts. We must assist the Word of God in our thoughts by making room for it in our hearts, and resist the evil thoughts of the enemy by taking them captive and bringing them into submission to Christ. Remember, you cannot stop birds from flying over your head, but you can stop them from building a nest in your hair. Bad thoughts come, but they do not have to stay, if we speak against them with the truth of God's Word. Let's pray. Heavenly Father, thank you for equipping us with spiritual weapons to demolish strongholds and stand against anything that opposes your truth. Help us to take every thought captive and make it obedient to Christ. Strengthen us to walk in your authority and live in obedience to your will. May we rely on your power and not our own, trusting you to guide us in every battle that we face. And Lord, we continue to pray for our longtime family member here, Hal, who has tragically lost his wife after an extended illness. We pray, Lord, that you would send angels to surround him, encamp about him, and help him as he deals with this grieving process that we'll all deal with at some point, someday, if we are married, and how it was for many years. It's in Jesus' name we believe and pray. And everybody said, amen. Okay, let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 75 points. The NASDAQ is down 84. S&P 500 is down 19. The Russell 2000 is up almost 4 points. In the commodity basket, crude oil is down $1.03, trading 77.80 last. That's a drop of over 1.25%, or roughly $1,000 per contract traded. Gold of $5.50, trading 26.84 last. Silver of 9 cents, trading 30.40 last. In the Asian markets at the close, the Nikkei fell 716 points. That's almost 2%. The Shanghai gained 80. That's a big day for the Shanghai, 2.5%. The Hang Seng gained 345, almost 2%. And in the European markets at the close, FTSE down 22, the DAX up 128, the CAC up 15. So we had a mixed day in Asia, a mixed day in the UK, and it's a mixed Radio Tuesday here in the US of A. We got 3 of the major indices, the Dow, the NQ, and the S&P, pretty firmly in the red. And the Russell, barely in the green, up just shy of 3 points. Kind of looks like the Russell, but sometimes will lead the other indices, but not always. It looks like the Russell's leaning towards joining the rest of the red indices. Confirmation hearings for President-elect Donald Trump's cabinet nominees begin today, with the Republican-controlled Senate evaluating more than a dozen key nominations this week. While more than 1,000 political appointee positions require a Senate confirmation vote, high-profile cabinet nominees must first undergo confirmation hearings. Today's hearings include former Representative Doug Collins for the Veteran Affairs Secretary and Pete Hegseth for Secretary of Defense. Collins, an Air Force Reserve chaplain, will likely face questions about improving veterans' health care. Hegseth, an Army National Guard veteran and former Fox News host, may be questioned over sexual assault allegations. Meanwhile, former North Dakota Governor Doug Burgum, his hearing for Secretary of the Interior, initially intended for today, was postponed until Thursday due to delayed paperwork. If approved by the respective Senate committees, nominees will require 50 votes from the full Senate for confirmation, with Republicans holding a 53 to 47 majority. Most nominees are likely to be confirmed. I listened in a little bit earlier on Hegseth's grilling, and well, I'm glad whoever wrote that article has uh, higher expectations than I do. It seems brutal, but I guess that's the way it is every time. I never really paid much attention to it in the past. Roughly 2 in 5 U.S. adults over the age of 55 will develop some form of dementia during their remaining lifespan, according to a new large-scale analysis published yesterday. The findings imply the number of newly diagnosed cases will double from around 500,000 to about 1 million annually by the year 2060. Dementia is an umbrella term for a number of neurodegenerative conditions that cause loss of cognitive abilities, including Alzheimer's and Huntington's disease. Researchers point to an aging U.S. population as the primary driver. Roughly a quarter of Americans are projected to be 65 or older by 2060, but also cited issues like poor diet and lack of exercise. Women who live on average 5 years longer than men had a 48% chance of developing symptoms compared to 35% for men, while Black Americans and people possessing a gene that helps carry lipids and cholesterol in the bloodstream ranged from between 45 and 60%. Alzheimer's accounts for about 2/3 of all dementia cases, and chances are you know someone who is struggling with it right now. Let's take a look at Wall Street. PPI numbers were out today. Wholesale prices rose less than expected in December, a positive sign for the economy amid recent market fears that inflation isn't falling as quickly as hoped to the Federal Reserve's 2% target. Today's report from the Bureau of Labor Statistics showed that its producer price index, the PPI, which tracks the price changes companies see, rose 3.3% from the prior year, up from the 3% seen in November, but below the 3.5% increase economists had projected. On a monthly basis, prices increased 0.2%, below the 0.4% increase economists had expected. Excluding food and energy, core prices rose 3.5% year over year, above November's 3.4% gain. Economists had expected an increase of 3.8%. Meanwhile, month over month, core prices were unchanged, below the 0.3% increase economists had expected and the 0.2% gain we saw last month. Trump wants to save TikTok. One possible rescuer could be Elon Musk. Chinese government officials, according to reports by Bloomberg and the Wall Street Journal, have discussed selling the social media app's U.S. business to the owner of X formerly known as Twitter, TikTok's parent company, ByteDance, that's B-Y-T-E, ByteDance, is Chinese. The officials would prefer to keep TikTok under ByteDance ownership, according to the media reports, but have discussed the sale to Musk as among their contingency plans if the Supreme Court upholds a U.S. law that bans the platform on January 19th unless it is sold to an owner not controlled by a foreign adversary. Trump, who on the campaign trail suggested in a social media post that he would save TikTok, has asked the Supreme Court to suspend the divestment deadline and consider his preference for a negotiated resolution, given that as president he will be responsible for national security. Trump takes office January 20th. Antitrust experts predict that Musk could clear U.S. legal hurdles imposed by a TikTok acquisition, which some estimate could amount to between $40 and $50 billion. Now, the reason this might get past the antitrust experts is TikTok and X have distinctly different users. As you know, in America we have anti-monopoly laws where you can't own every grocery store in town unless it's a small town that only has one grocery store. I'm kidding, but you understand the anti-monopoly laws. And owning both Twitter or X and TikTok, that might seem like a monopoly to a lot of people. We'll see. We'll see how it plays out. One of Wall Street's most speculative trades just had some of the froth wiped out in dramatic fashion. The outlook is looking murky from here on. Quantum computing stocks, some of which soared more than 1,000% last year, have tumbled after NVIDIA Corp's chief executive officer last week said that a strong use case for the technology are probably more than a decade away. The reckoning was the latest sign that the euphoria has become overblown after some of the sector lost more than half their value in recent trading days. The current trading action rhymes with the dot-com bubble, according to Bill Stone, a chief investment officer at Glenview Trust. It's really hard to make any kind of long-term investment case for quantum right now. D-Wave Quantum Incorporated and Quantum Computing Incorporated and Rigetti Computing Incorporated were among those that saw dramatic declines recently, though they were up a little bit today. The attraction to quantum computing, with processing power millions of times greater than regular computers, is in its potential to spur massive advances for industries including life drug discovery, advanced material design, and encryption, to name a few. Stocks and bonds saw small moves, with Wall Street traders unwilling to make any significant bets as they await key inflation data for clues on the path of Federal Reserve rates over the next few months. In the run-up to tomorrow's Consumer Price Index, the CPI, The S&P 500 was little changed after an earlier advance that came on the heels of a surprise slowdown in wholesale prices. Options traders are bracing for the equity gauge's busiest CPI day since March of 2023. The index is expected to move 1% in either direction on January 15th, based on the cost of at-the-money puts and calls, according to Citigroup. All eyes are now on tomorrow's CPI report, which may be the most important inflation reading in recent memory, as it will fuel the market's Fed-obsessed sentiment. A strong inflation number adds to this idea of no cuts in 2025, and potentially even a rate hike, while a weak inflation data point may help to calm the market's Fed fears. And last, from Reuters, the nation's three largest pharmacy benefit managers have significantly marked up the prices of certain medicines, including those for heart disease, cancer, and HIV, at their affiliated pharmacies, according to the U.S. Federal Trade Commission, the FTC. From 2017 to 2022, the companies United Health Group, Optum, CVS, CVS Caremark, and Cigna's Express Scripts marked up prices at their affiliated pharmacies by hundreds or thousands of percent, netting them $7.3 billion in revenue, in excess of the acquisition cost of the drugs. The FTC is not happy and has sued the three PBMs in September, accusing them of steering diabetes patients towards higher-priced insulin products in order to reap millions of dollars in rebates from drug makers. The companies say the suit is baseless and defend their practices. Pharmacy benefit managers, or PBMs, act as middlemen between drug companies and consumers. They negotiate volume discounts and fees with drug manufacturers on behalf of employers and health plans, create lists of medications that are covered by insurance, and reimburse pharmacies for prescriptions. So, there you have it. Let's take a look at Logic 247. Quick pause. Hang on. I'll be right back. All right, Logic 247, that's our 24/7 around-the-clock E-mini alert service. We're currently in week 337. Over the last 337 weeks, we have issued over 18,800 individual handcrafted alerts. Now, it's not just E-minis, it's also crude, gold, silver, bonds. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 19 alerts. Still waiting on the outcome of 7. That gave us 12 actionable alerts. At the time, Valerie did the recap this morning at 6:30 a.m. Eastern. One stopped out, that's 8%. What we've averaged over the last 337 weeks is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. So it's early, but so far, good week. Now the purpose of the logic alerts, yeah, you can trade them, but the real purpose is to teach you how to read a chart. You want to get to the point where you can look at any chart of any market in any time frame, apply our humble set of indicators, and instinctively know what the next high probability move is. And the Logic 247 alerts will help you do that. About 20% of the time, as we've shown over 337 weeks, the market will actually do something other than the next high probability thing. So there's no 100%. If you're chasing a holy grail where you're always right and never wrong, that doesn't exist, that can't exist, that will never exist. It would defy the laws of science, physics, even God. So don't waste your time, don't waste your treasure. The bottom line is you have to learn how to trade, and in order to learn how to trade, you got to first learn how to read the chart. Okay? So use them as they're intended, and they will serve you well. Now, our original alert service is different. The concierge trade alerts. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. So our day session is their night session and vice versa. But the CTAs, they don't come out around the clock. They're published as a static report shortly before the Globex Open. Some days shortly after. For many years, it was shortly after the Globex Open. For the past month or so, I've been doing my best to get them out 5 minutes ahead of the Open. I put a note in the Telegram discussion group if they're going to come out 5 minutes ahead of the Open so that folks can be prepared if they want to take advantage of the early opportunity. So last night they did get out at 5:55 p.m. Eastern, 5 minutes ahead of the Open. S&P 500 E-mini futures, the Dow, the Russell, crude oil, the NQ, gold, silver, and bonds. All of our members, all of our trial members had every one of these targets 5 minutes before the market opened last night. So with that, let's go to the daily chart of the S&P 500 E-mini futures. Now, as you can see from this wick, we had a rally early on because of the high impact news today that said there's a perhaps possible chance, there's three legs to the stool, and one leg today said maybe we'll get an interest rate cut. That sent the market higher, but that was short-lived, and well, now you can see where we are. We're below that really important inflection point that we've been talking about for a very long time, it seems. If we close below that today, now yesterday the low of the session was the 38% fib retracement. Now, on the broadcast yesterday, I said it would be very interesting to see price end up closing green. And we outlined the obstacles overhead, red and falling, the step line, the zero line on the fib extensions. And as you can see, that's where that wick went. It went right up to the zero line on the fib extensions, which has also been support on quite a number of days. Today, though, it was resistance. That has pushed price lower. So the next obvious major support will be yesterday's low, which is the 38% fib retracement. Now, the daily chart is important for a number of reasons, whether you trade futures or stocks or crypto or Forex or ETFs. Before you start trading, whatever it is you trade, spend 2 minutes with the daily chart. Institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. And they're the ones who actually move price. It has everything to do with account size and the size that they trade in. So by just looking at the daily chart, you get a free look over the shoulder of the deep pockets that move price. Not only do you get that free look, but you're also able to identify where major areas of resistance and support are, just as we did yesterday. We said we had resistance times 3 at this area, and well, there it is. So 2 minutes with whatever it is you're about to trade. Identify major areas of support and resistance, jot them down, and then go to whatever time frame it is you trade on, keeping in the back of your mind those very important numbers. The market has memory. Okay, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. The vertical lines separate today, Tuesday, from Monday. Back over here is Friday. These are this week's weekly trading zones. The zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones on a weekly basis for our members every trading day for 15 plus years. This past December, we hit the 15-year mark. When price rallies up to a zone, we expect support until proven otherwise. When it drops to a zone, when it rallies up to a zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. When price encounters a zone, one of 3 things happen. You get some form of consolidation 70% of the time. 20% of the time you get rejection. 10% of the time you get the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. We can see in this case, well, actually we don't have a slice there. Oh, the slice was up here. Yeah, but that's Friday. We had a different set of zones. So And when I come across a good example, I'll show you. So we had a gap higher open last night, okay? That little tiny red candle hiding behind that vertical line that separates yesterday from today. That's where we closed yesterday afternoon. And we gapped higher last night. We consolidated here at the zone. Then we made our run up to the long target. And that long target was based on these highs right here from Friday. We hit the zone resistance, or we hit the target resistance, which sent us back to the zone support. And then we got the news at 8:30, and it sent the markets rocketing higher, okay? Almost up to these highs right here from Friday, but not quite. It's pretty short-lived, but the candle did close green, and we did hit the long target one more time. Then we came back down to the zone, consolidated. We're below the BBC. We've got red and falling. Everything's in place for a move lower, and that's exactly what we got. Now we would expect price, if it makes it down to this area, this where the bullish cross took place. Now a bullish cross, that's when the blue line gets above the green line. If you have a bullish cross that leads to an extended move, the first time price revisits that area, it's almost always a good support. And that's where the short target came from. So we got a leg and a retracement. We'll most likely get another leg to the downside. Keep in mind that area should be good support, maybe good for a bounce. The step line is potential resistance, red and falling is potential resistance, the BBC and the zone, all potential resistance. So the market has quite a wall of worry to climb to get us back above the BBC, where we would then be looking for long opportunities. On the Dow, here's where we opened last night. The opening price was 569, and we ran up to 656. It's almost 100 points. It takes 20 points to get your goal for the day. So we had a leg and a retracement and a leg where we hit the target, which was just below the zone. We consolidated for hours, and then we pulled back to the BBC. The pullback holds more often than not. You can see it here, you can see it here. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Simply stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Pretty simple. So we banged that long target and that zone a number of times. Then we finally traded lower during the 11 o'clock hour, and that took us down to a low of 42,374. The zone is 350/55. So buyers came in off this little low right over here. They bounced us up, but again, they got a lot of work to do. Got to overcome the step line, got to overcome red and falling, and then once they overcome blue and climbing, then they've got all this resistance here to overcome, all the way up to here. I would say the probability of today being a down day is pretty good. Keep in mind up here you do have a bearish cross, And this high right here, this is a bearish cross that happened on Friday. Led to an extended move. Price revisited the area and it came very good resistance. On the Russell, gap higher open there last night. Remember, the targets came out 5 minutes ahead of the open. The Russell opened at 22.13, and during that first 30-minute candle, made it all the way up to 22.21. So that's 8 points. Takes 2 points in the Russell to get your goal for the day. Then we had a retracement to blue and climbing, which held as support. Got another leg up. And then a deeper retracement, but the pullback held. Both of those candles are still touching the BBC. And then the 8:30 news came out, and we had a huge green candle all the way up to here, to the previous bearish cross. You're like, no, wait a minute, we just looked at that chart. No, this is a different chart, this is a different market. But the indices behave in most cases under normal market conditions in a very similar manner. Okay? See the YM? See that wick? See that bearish cross? Russell, bearish cross from Friday. Today's high, right at the bearish cross. Does it happen 100% of the time? Very few things happen 100% of the time in the markets. Does it happen more often than not? Yes. Gap higher open on the NQ. Now we're seeing these gaps, earnings seasons, blah blah. You don't see too many gaps on futures normally because they trade around the clock. Stocks trade around the clock as well, but in the US you have limited access from 9:30 a.m. to 4 p.m. Eastern. Then Asia opens and they trade the same stocks, and then the European markets open and they trade the same stocks. That's why when you look at your stock charts, on any given stock, on almost any given day, you're going to see a gap. Gap higher, gap lower. It's simply a reflection of what the Asian traders and the European traders did overnight. So, we hit the zone, which we expect to be resistance. We spiked it a little bit up to this high right here. And that sent us a little bit lower. Did we fill the gap? Not quite. That was an attempted gap fill. It didn't quite fill. Caught another run to the upside. Okay. And then the market just lost steam. We got back below the BBC. This time we did fill the gap. And then here comes that 8:30 news. Took off like a rocket ship. But we failed to take out the high put in earlier. See, this right here was the London Open. And then at 3:30 a.m. Eastern, we got our high of the day. And then price fell, got below the BBC, found support right here. Basically this area right here. That's market structure. Sent us back up to the zone. We spiked it, but closed at the zone. And then we spiked, then we spiked, then we spiked. And when you see a whole bunch of big wicks to the upside like that, And you should be expecting this, because price keeps getting rejected. I mean, buyers are only going to spend money if they can't move price substantially higher. Guess what? They're going to throw in the towel. They're going to hit pause on the buy side. And when they do, this is what happens. It takes financial commitment for price to rise. But all it takes for price to fall is for buyers, institutional buyers, to hit pause on the buy side. And then institutions that specialize in short selling, they'll come out of the woodwork and attempt to drive price as far down as they possibly can. How low did they go? Well, they made it down to the zone at 20,810/811, the weekly trading zone. When the market finds support, it will go look for resistance. So we've got potential resistance here at the step line, at red and falling, at the high of this candle right here, and then the BBC. So in order to get above the BBC, the market's going to have to, some confidence is going to have to come from somewhere, because again, it takes financial commitment for price to rise. Crude oil covers the indices. This was the open. We dropped to the BBC, red and falling. When price pulls back to the BBC, although the pullback holds more often than not, in a scenario like this, that's when price may trade through. And it did. It hit the zone, which is 78.15/20. Support will always send the market looking for resistance, which it found at the target, 79.10. And we got a little doji on the next 30-minute candle. And then down we go to the zone. Support bounces up to the BBC resistance, which sends us back down to the zone and to the target. And we've just consolidated sideways pretty much since then. Gold. This was the open last night. Now you're above the BBC. Well, you're below the BBC, but you got blue and climbing below you. So you got resistance overhead. You've got support below. This candle opened at 26.82 and ran up to 26.85. So there was $300 per contract traded potential profit in the first 30-minute candle. Here we see the step line and the BBC running parallel. So price, it attempted higher. It actually got as high as the body of that candle right there. But you can see leg, retracement, leg. Now this was that 8:30 news. We did hit the short target and we did spike the BBC. Consolidated. Now we're sitting on top of the BBC and blue and climbing. So that's support times 2. But you've got the step line. You see where the top of that body is? It's right at the step line. That's potential resistance. So price is trapped here. 2 reasons for price to move higher. 1 reason for price to not move higher. And if it does move higher, then it's got to deal with this resistance here. So you got a double top across here. Then you got potential resistance across here. And then you run into the long target. And on silver, this was where the open was. We hit the BBC It sent us down to the target, back to the VBC, back to the target. We did spike, and we consolidated, spiked again. So we're pretty volatile today. Once again, we hit the short target, then again we hit the long target, and right now we sit right on top of the VBC. So that covers all the markets. Okay, where we close today from a daily perspective will be very important. Michael's here. He's going to give us a recap of what happened in the live training room. Then we'll do some live trading on TradingView, and then I'll come back and we'll wrap things up with our good word for the day.
All right, here we go. Crap, I just remembered something. Sorry, Ronnie, I can't do that. Ronnie, I just texted him that I could do something, but I can't.
Okay.
I'll text him back in a minute.
Anyway, screens look good.
Okay, good. Hang on, let me just say I can't do tomorrow. Can't. There. Okay. All right, so here we go. Good afternoon, everybody. Happy Tuesday. It is the 14th day of January, 2025. If you have not taken a free trial with us, go here. Go here to mytradingiq.com. Click on the purple button right here. Click on the purple button right here. There is no credit card required for the trial. When you click on that purple button, it's going to bring you to this registration page. It takes 30 seconds to fill it out. Make sure you give us your TradingView login ID. All right. Our indicators, the ones that we use in the room, the ones we use to get all these results, are TradingView only. So if you don't have TradingView, then you can go here to mytradingiq.com, click on trading platforms, and click right here. You can watch this video. It's a 2-3 minute video. But just click right here, basically, and that's going to bring you to this page. Click on monthly. The plus will give you 4 charts. The essential will give you 2 charts. Okay, I use 4 in the room in the morning, but if you're only going to use 2, just do the essential. It's a 30-day free trial. Once the trial is over, then they're going to bill you for the $29, for the $14.95, whichever one you're going to do. You do have to pay for real-time data. The real-time data is $7 a month. Okay, this stuff is a trial. It's a 30-day trial. You don't get charged for that at all to get TradingView. Okay, make sure you go to monthly and make sure you're on non-professional. Professional is a bit more expensive, you see. They only have 2 versions of professional, and this is the monthly. It's $239 a month. But make sure you go to non-professional. Okay. All right. The results. We had a pretty good day today. If you're gonna read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, the 14th day of January 2025, we're up 290 ticks on the NQ, minus 19 on the Russell, break even on the gold, plus 27 on the ES. That puts us at $1,692 this morning with 1 contract. Today it took 6 minutes and 3 trades to get to the goal for the day. At that point, we're up $1,100 with 10 contracts on. All right, we took a total of 28 trades this morning. So on the month now, we're about halfway through the month. You know, all the holidays. Actually, we got another holiday coming up. We got a long weekend this weekend too. I think the markets are closed on Monday, so I think. Anyway, but halfway through the month, we're at $14,250 with 1 contract, averaging $1,781 per contract per 2-hour trading day. Telling you, with the divergence trades that we're doing right now, these numbers are going to be consistently way higher. By the end of the month, I expect this month will end being better than any month we had last year. We've already had a day better. Our very first day of the year was better than any day we had last year, and I expect this month will be better than any month we had last year. We're only halfway through and we're already at 14 grand. I'm at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 business days left this month. We're only 8 business days in. So we're actually only a third of the way in. Well, actually more than a third, but whatever. That's where we are on the day, on the month, and on the year. The year is the same stuff. The 24/20 blueprint. If you quit trading when we got the goal for the day, so far we worked 38 minutes this month, 38 minutes in 8 days, and we made well, you'd be at $1,615 right now. So 38 minutes, just pretty much multiply that times 2 to be averaging $3,000 an hour right now. Okay. Okay. Let's get into the trades. Gold. Let me flip this over. Gold. We had, I guess the Russell is one that we had the least trades on. Gold was the next. We ended up with gold at break even on the day. Let's see. Well, you can see I use gold for part of the lesson plan in here. Now we started out with gold right here. We had a small win there, a 1 tick, then another 1 tick there to get us to 2, then a 5 tick there to get us to 7, then a 2 tick there to get us to 9. And then somewhere in here we stopped out right there. That put us to -6, and then right here we got a +6. That put us back down to 0, or back up to 0, I suppose. You see, I was using this for a little bit of training this morning, saying how we're stuck in a range right here. And when you are stuck in a range, it usually works out to be a pretty good thing. It did a head fake here to try to think you were going to get into a downtrend, but then went right back up to the top of the range. And that was all that we did. Now this morning, there were more trades. It was this one here that we took, this one right here that triggered right at the end of the session. That was a nice short trade right here. You've been selling the open of that bar. Buying the open of this bar right here, pulled back pretty deep, but it didn't stop you out. Turned out to be a win. Buying the open of that bar, pulled back again pretty deep, but didn't stop you out. This one right here was kind of tricky. We've been buying the open of that bar, and that would have stopped you out. If you did do that one, that would have stopped you out. And this one right here also would have stopped you out. You'd be still in that right now, but pretty close to stopped out. And that's what happened with gold today. All right, that is what happened with gold today. Now, let's go to the Russell here. Okay, on the Russell, let's slide it all the way over here. See, we started out here on the Russell, and we had a rough time with the Russell again today. Yesterday we were down on the Russell 40 ticks. Today we're down 19 is what we ended. We never got positive. Oh, we did get positive just a little bit today. We were -25 on the first trade. The second trade, we picked up 10 ticks to get to -15. Then we picked up 1 tick to get to -14. I'm sorry, then we picked up 14 ticks to get to -1. Then we picked up 5 ticks to get to +4. And then all the way over here, we stopped out again. And that put us down to -19. And that is where we ended it with the Russell for the day. Now, toward the end of the session, I thought there was another trade in here toward the end of the session. I guess not. Maybe one right here. Yeah, there was one right here right at the very end. I was closed. I was stopped trading by then. But that wouldn't have worked out. That would have stopped out. There was one right here that pulled back pretty deep. It would have been a break even at best. Break even at best. Okay. And right here, that would have been a break even. It did go down into profit pretty nice before it moved up. And right here, finally a winning trade on the Russell. All right, so the Russell's been kind of rough on this 20 range the last couple of days. The ES, we had some nice trades on the ES today, and you will be able to see several of those trades. Hang on, I'm scrolling all the way back here. All the way back here. Here we are. A little bit further. There we go. On the ES, our very first trade on the ES was a break even. Then we had a +8. Then we had another break even and a stop out, so we're at -2 at that point. We missed a couple of trades here, one there and one there. Then we grabbed this one. We went from -8 to -2, so we picked up 6 ticks on that. Then we picked up one more tick there to get to -1. Then we had a couple of trades that we missed, a good one there, a good one there. It looks like there are probably some more trades in here that I missed there and there and there. We got a break even on that one. We missed that trade there. Then we stopped out on this one. So we were at, on the ES, we were at +2, -1. I missed something in here. Yeah, we had a big win in here somewhere. I think it was on this one right here. We had a big win where we went from -1 to 23, so we had a 24 tick win. And then we stopped out. I think it was right here. It was our 24 tick win. I don't think I put the arrow on it, but it was right in here. This was actually a 24 tick win. And then we stopped out. We went from -1 to +23, and then we stopped out, went down to 13. And then we had a few more trades in here. We went from 13 to 15. So we had a +2. Then we had a break. Nope, we went from 15 to 19. We had a +4. Then we had a break even, and then we had a +8 right here. That was our last trade of the morning session, was that +8. Now, moving through it right here, we had Looks like there was another short in here, right here. A short right here. That would have been really close to stopping out. If it didn't stop out, it would have given me some nice profit. But a long from the open to this bar, again, it got kind of tough trading in there. A long right there that worked out okay. A long right here that worked out okay. Running over here, a long right here that worked out. A long right here that worked out. A short right here that worked out. A short right here that worked out. Well, there are a whole bunch of trades there on the yes. It was just a long recently. That didn't actually hit the oversold. Okay, there was a short recently from right here. It would have given you some profit, 6 or 8 profit. And that was it. It's about to give you another long right here. If you get it down close to this bar, you probably have a long opportunity right there on that one. Now let me jump over to the NQ. We didn't have a ton of trades on the NQ today, but we had some pretty good ones. We did let a couple of them go for the full 75 ticks, so those were good trades. Now we started out on the NQ. Our first trade on the NQ was right here. We picked up 36 ticks. Then we had 75 to get us to 111. Then we had another 75 to get us to 186. Then we had a 4 tick to get us to 190. Excuse me. Then there were a bunch of trades in here, some nice big winning trades in here, but I missed them. Okay. I did do the lesson plan today. We got in here and we went from 190 to 230, so we had a 40 tick gain in there. Then we went from 230 to 270. We had another 40 tick gain. And then we went from 270 to 290. I think this was the 270 to 290. And in here, while I was in the lesson plan, we had a 40 tick gain. So we had 2 40 tick gains at the end, and we ended up with 290. 209 ticks on the NQ. Now, during the break, right here during the break, there was one great trade right there, 75 ticks. One trade right here that would have given me some profit. One trade here, great, 75 ticks. Another 75. Another one right here that wouldn't give you, it gave like 45 before it pulled back up. There was one right there that would have been 75. Within that one, there was one right here that went long. It would have been a long from the open of this bar, so that would have stopped you out. You would have been in the other trade though, so you wouldn't have taken that at all. There's a short here that went about 50 ticks before it pulled back up. And there was a short here that went from the open all the way down here before it pulled back up. So 40 to 50 ticks before it pulled back up. And it's about to give a long right now if we get it down close. And that was it. So there were a ton of trades there on the NQ. Some really nice big trades. And remember, we're on a 50 range on the NQ. 50 range. So that means your stop is 60, your target is 75. Okay. On the DOM, that's a long way to scroll to get between the 60 and 75. That's a long way to scroll, it seems like. All right. So for anybody coming in on YouTube right now, if you haven't taken a free trial, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on the purple button, sign up for the trial. Okay. When you sign up for that, you go here to this registration page. Make sure and give us your TradingView login ID. Okay. Without that TradingView login ID, we do not know that you took the free trial, so make sure you give us that. Okay. All right. Back here to the trading now. We just got into the oversold there on the NQ, so that would be a nice long opportunity right in here. Now the entry point should have been right here at 75.25. 75.25 is where the entry point should have been, right in there. Okay, should have been right in there at 75.25. I'm in at 77.75. Now it's got to go 5 points into profit, so it's got to get up to 82.75 for me to bump the stop to break even. I don't think it's gotten there yet, has it? It has just gotten there. Okay, so I'm going to bump the stop to break even. I just got there again. So I'm going to bump the stop to break even. Now the entry was when this went into the oversold, you buy the open of the next bar. Now I'm off by a couple of points right there, but it's still pretty close. When you're talking about a 50 range bar, a couple of points isn't as significant as you would think, as it normally is anyway. All right, so we ended up with a break even on that. We did have some pretty good profit in it though, but we ended up with a break even. We had the goal for the day in profit. I mean, to bump the stop to break even, we actually have to get the goal for the day in this. That was sort of what I meant the webinar I did last week to be about, but I never got around to it. All right, does anybody have any questions about anything? Anything that we're doing in here? right now. All right, so well, on the ES, if we get another up close here on the ES, it should bring that up into the overbought by itself. Right? It takes at least 2 bars. The relationship between the blue and the black lines. Well, one of them is the trigger, and one of them is the slingshot bar. The black line usually is slower than the blue line. Usually. That's why we're looking for the blue line to lead and the black line to show divergence from the blue line, to be separated from the blue line. Okay, that's what we want to see. When it separates like this, usually the blue line is going to turn back into the black line and get back into it, and then they'll come back and do it again. That's what I'm looking for in there, partner. Okay. So right now, at this moment, what we're looking for is we're looking for the blue line to move away from the black line here. Right, that's what we're looking for, the blue line to move away from the black line, like it did right here on the NQ. Okay, you see how we have that up close there on the NQ right now? And it's got the blue line way up here and the black line's way down here. If we get another up close here on the NQ, it should move the blue line into the overbought by itself. Okay. Now if I go here and I shut off the cover on this, or I make it a little less visible, and I make this a little darker, you can see the blue line is up here and the black line is down here. Okay, so what I'm looking for is an up close that's going to bring this blue line into overbought by itself. Now, I'll slide this here for now and we'll wait. See, that kind of got down into the oversold by itself there on the ES. Right there. See, the black line is above it. So the blue line is down there in the oversold by itself. So you could have bought the open right here at 65.25. Now it's too late to do that now. If you didn't do it, it's too late to do it, and I didn't. It's too late to do it now because it's already run into profit. Okay. Now it's about to get into the overbought where you would sell the open of the next bar. Same thing over here. It's about to get into the overbought where you would sell the open of the next bar. So this is what it will look like on the DOM. Okay. I'm waiting for this up close here, or this is actually up there. So I'm just going to sell right there on the NQ. Okay. So it's pretty close to the open of the next bar, 85.25. It was exactly the open of the next bar. Okay. So I'm short the NQ right there, and I want the ES to close up, so I can do that. Now the NQ is going to get down 5 points from here. It's going to get down to 77.25. Maybe bump the stop to break even. Now keep in mind that 5 points is the goal for the day. All right, on the ES we just did it, but the black line went up with it, so there's no trade here on the ES. All right, there's a 60 tick stop here on this NQ. That's what I was talking about earlier. Scrolling all the way up to those 60 ticks seems like a long way. All right, now the ES just had this run up. The NQ might run with it and then just stop me out. Looks like it's going to, and it did. That was my first NQ stop out today. Okay, the ES didn't end up giving us a trade because the black line went with it into the overbought. But that's it. That's all you're looking for right there. You're looking for just that again and again and again. So you see this is closing down right here. Now this is something that I meant to go over in the lesson plan today. I don't know that I covered it very well. I see how the market went up and then it retraced and then it went up. And so now what you'd expect is a retrace and then another leg up, right? That's what you'd expect right here. So we'll look for the opportunity to trade it both ways. It doesn't look like we're going to get one on the way down. Now, it could go sideways here and we could end up with a move down and a move back up in the slingshot down there in the trigger. But right now, we expect it's going to move down, retrace part of this leg up, and then move up again. That's what we expect, right? I don't know what it's going to do. But that's what I would think it should do. All right. Slide that back over here, and we'll see what happens with that. The gold has got a short right where it is. See how we got the up close and the overbought. So you sell the open of that bar right there. The open of that bar is right there at 81.4. 81.4. So you can sell it right now. Trying to sell that there. I just filled at 81.4. Okay. So this right here is the pullback that we should get. This is going to get into the oversold and then we'll buy it. Okay. And that's all you're looking for. Again and again and again. And there it is. Now we're going to buy it right here. Okay. Bought the ES right here, pretty close to the open. The open was 70.75. We're in at 71.25. We're up by 2 ticks. That's fine. I'm going to buy it because we went into the oversold. Buy the open. Now, once we get 4 ticks in profit, we'll bump the stop to break even. And over here, once we get 5 ticks in profit, we'll bump that stop to break even. And the NQ doesn't have a trade yet. Okay, I'm going to put them right next to each other. I don't have to keep flicking my eyes back and forth. So looking for this to go up 4 and this to go down 5. Okay. There's 2. There's 2. Now I'm just looking to get my stops to break even, to get my risk off the trades here. Okay. There's 3. It needs to get right down to here, to 80.9. Okay, that needs to go 1 more tick. They both need 1 more tick. Okay, that stops at break even, and that stops at break even. So now I don't have any risk on either trade. Okay. So this should get down to here, to 80.0. And this should get up to there. Okay, I'm going to lock in 2 ticks profit on this one and 1 tick profit on this one. All right, so we're out with 1 on the ES. And this should get down here. That would be 14 ticks. But you see right here, this is what it should do now. It's done the pullback, and now it should make the leg up. Okay, and right there. Right there, it's actually got a sell on the ES. Lock in 3 on the gold. And we're out with 3 on the gold. So we had a little profit on each one of those. Now the NQ over here needs to get into the oversold. Okay. Let's get into the oversold. If it gets into the oversold, we'll buy it. Okay. That's what we're looking for. We're looking for it to get into the oversold so we can buy it. The ES is actually a sell. Where it is. Okay, right where it is. I know it's supposed to go up right here. It's supposed to have a leg up, but just following the rules, when it gets in the overbought by itself like that, you sell the open. Okay. Anybody have any questions about any of this stuff? Any of it? I'm happy to cover any part that you want me to cover. The gold kept going down. That's good. The ES needs 4 ticks in profit to get the stop to break even. Okay, 4 ticks in profit. So my entry should have been at 73. I'd been 1 tick better actually than the actual open. Okay, and it looks like it might stop us up. Might complete this leg up and then stop us up. And if it does, it does. You know, that is why you want to quit when you get the goal for the day. Don't keep trading. There it is. Just stopped us out. That didn't seem right. I might have clicked on it by accident. All right, it's 1:24. We have 6 minutes left. We might get another trade in here. We might not. I don't know. But let's go see what's going on over here in the Bitcoin world. From its low yesterday, Bitcoin's made a huge move back up today. Let's go look out here. And this guy, ooh, that's made a big move up today too. Nice big move up. Percentage-wise, I don't know what that is, but it looks like it's pretty good. The December high was over here at 290. It looks like it's pretty aggressive there. They're talking about that being 10,000, even 60,000 I've seen. That would be something. All right, so right now, this is pulling back into the oversold right here. Well, the black line is, but the blue line's not, you see. So it did the extra leg up like I was looking for, and now it's going to do another pullback. The pullback should get to about right here. I don't think we're going to get a trade set up for the pullback. That's about what it should do. So if we were doing the diamond principle, this worked out just about right. You guys remember the diamond principle? From there to there to there. This is your time. This is your price. Okay. So if you take time and you flip it over, oops, that was one big thing. If you take the time, just from here to here, and you flip, oops, that's a mistake. And you flip that right over there, that's your time. And this one right here was your price. Okay, kind of. So the diamond principle worked out perfectly right there. Now the black and the blue rose together over here on the gold, so you don't have anything there. Same thing here on the Russell. And they're separated here on the ES, but neither one of them is in the overbought or oversold. Right, Bart? So you see the difference, relationship between the black and the blue lines in there? All right. Look, made my leg length. Now we need it to pull back. All right. Nothing has got a trade set up right here. Everything looks like it needs to pull back right here to give us another trade setup. Okay. Now pullback isn't normally a thing that we look for with this. Usually we're going to see something we'll enter to be part of the pullback, and then enter at the end of the pullback when we go back in the right direction. But right now, the way things have worked out, everything's in the overbought on all four of these markets. So I'll just have to wait a few minutes and see how it all comes together. We only have about a minute and a half left, so I don't know if we're going to get another trade. You know, things can move pretty quickly, and fish can't swim in shallow water. All right. So what I see now, I think we're going to run out of time, guys. We don't have another trade setup coming up here yet. The blue needs to lead into the overbought or into the oversold, and that's just not going to happen. All right. So we had a few trades in here that all triggered, and one of those stopped out. The other ones didn't. But it was a pretty good session overall. Hopefully, y'all get to see what to look for, what to expect. It's a really simple trade setup. Okay, you're just waiting for the blue to lead into the overbought or blue to lead into the oversold, like this right here, and you sell the open of the next bar right there, or this right here, and you buy the open of the next bar right here, buy the open of the next bar. It's as simple as that. All right. So if you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. No credit cards required for the trial. Sign up for the trial right there. All right. And that's it. This morning we're up 1692 with one contract, right? A lot of trades. This thing trades again and again and again. So we had a lot of trades. Our slowest day this month, we still had 19 trades, right? That is it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am.
Excellent. Let me see if Fred is in here so I can facilitate that meeting.
Recap of the morning session.
Today, Dwayne, it took me 6 minutes and 3 trades to get to $1,100.
Good job.
Thank you.
All right, guys, we're going to wrap it up with our good word for the day, the gift of confession. Ephesians 5:2. Walk in love as Christ also has loved us. Spiritual healing takes place when you're able to confess your problem to someone mature enough to handle it and committed enough to not give up on you. What does it mean to walk in love? A, to be confident of God's unfailing love towards you. B, to show his love to others. C, to be able to accept their love in return. Only then can you become spiritually whole. You can only be loved to the extent that you're known. When you keep a part of your life a secret, others may tell you they love you, but deep inside you think, if you knew the whole truth about me, you wouldn't love me. So you're unable to receive and be strengthened by their love. Sin isolates us. And sin and isolation will make us sick in our soul and even in our body. Confession and then prayer, connectedness to each other and God, ushers in the Spirit and promotes healing. To be fully known and fully loved is the most healing gift we can give to each other. The Bible says in James 5:16, confess your sins to one another and pray for one another so that you may be healed. We're all forgiven, recovering sinners, and no one can be secure in a relationship if they're only loved because they're intelligent, strong, pretty, or successful. One Bible teacher says, when we honestly ask ourselves, which person in our life means the most to us, we often find it is those who, instead of giving advice, solutions, or cures, have chosen rather to share our pain and touch our wounds with a warm and tender hand. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.